Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate this topsy-turvy, upside-down world for greener pastures on the other side, coming out healthier, wealthier, and wiser, trying to build our best lives under difficult circumstances. Here we go. We'll take a look at the billionaires' wealth, as how it compares to us, the working stiffs, see if we did as well as they did in these last several months. Probably didn't, as you would imagine. We'll take a look at Bitcoin as well as XRP. It'll be a tale of two different stories. But first, from Markets Insider, US billionaires' wealth grew by $845 billion during the first 6 months of the pandemic. And of course, here we have Jeff Bezos, Bill Gates, and Elon Musk amongst the top earning billionaires. The wealth of 643 of US richest billionaires rose from 2.95 trillion to 3.8 trillion between March 18 and September 15, a report by the Institute of Policy Studies and Americans for Tax Fairness said. This marks a 29% increase over those 6 months. Tesla founder Elon Musk's wealth increased by 273% in the period to $92 billion. Chuck Collins, director of the Institute for Policy Studies program on inequality, said the difference is stark between profits for billionaires and the widespread economic misery in our nation. Clearly, the priorities of our elected officials in Washington, D.C. are completely upside down. I guess you have to go to these, non-profit or privately held institutes in order to get some sense of the reality out there. Clearly, the analysts are not going to be telling us exactly what's going on. They're selling their book, and they're going to support the companies that they're supposed to be discussing, right? So whenever an analyst says hold, that is literally a sell signal. But you can't even rely on these things either. So I guess we have to go to the alternative institutes in order to see exactly what's going on. Though this is not a surprise to any of us. I mean, if you've seen the price of Amazon and Tesla shares, for example, Microsoft as well, you know exactly what's been happening here. And here's a table of the wealth of US billionaires at 6 months and 20 months. You can see the percent of wealth growth. This is in 6 months. Elon Musk has grown his wealth 273%. Mark Zuckerberg by almost 84%. Jeff Bezos by almost 65%. Warren Buffett even by 23%. So Mackenzie Scott, she's Jeff Bezos' ex, of course. So she has a substantial amount of Amazon shares, 66%. Daniel Gilbert, 672%. That's astonishing. I don't know who Daniel Gilbert is. Perhaps those of you, here it says, Quicken Loans. Amazing. There you go, folks. So, I mean, this really is creating the inequality, I guess, that the Fed has been trying to achieve, even though that's what they won't say. What they're trying to say, as we heard yesterday from Zero Hedge, they're trying to help families and kids, which is nonsense, of course. All this money that they've been releasing from the Fed and printing is going straight into these assets. Obviously, this is why these people are becoming so wealthy. Not because their incomes are increasing so much, but because their wealth is primarily in the businesses that they founded or started. And in the case of the Waltons, that their parent, father or grandfather started. Nevertheless, this is where all the money has been going into these stocks, and so their wealth has been increasing. Now, it's not to say that I have a huge problem with somebody who creates a business and becoming rich off of the stock price of it, but it's just endemic of the problems that we have in the way this has been totally mismanaged. While they're fighting over a $1,200 stimulus for the average person, this money printing is going into the stock market and creating this huge asset inflationary bubble. And that can, it shouldn't end well. We'll see if it does. I'm sort of getting tired, obviously, of singing the same tune. I'd like to be able to talk about something different at some point, but we could be in for this for months yet. But there's a glaring example, folks, of how this economy is being bifurcated, as I keep saying. Those at the top, those close to the money spigot, of course, the Cantillon effect, and get all the money, or most of it, and this is what's happening. You and I get very little. In fact, where I work, I'm sure it's probably the same with most of you. There'll be no wage increases this year at all. This is where most of us are going to be dealing with, right? Stagnant wages, or perhaps lost jobs or lost wages. It's going to be very challenging for some years, I imagine. Okay, so investor place here, Bitcoin's buying opportunity, suggesting that right now is a good time to be buying Bitcoin. Retail investors in Wales have been handling Bitcoin differently. Matt McCall's perspective, the $288,000 prediction. Let's say you're interested in investing in a specific asset, but you're not sure how to play it. Whose lead should you follow? Thousands of small investors who were investing no more than a few hundred or a few $1,000s each, or a handful of big dollar whale investors who are investing minimally 10 million, some up to 50 million. I'm going to guess you'd choose to follow the whales, and that would be the smart move because that's the smart money, as they basically discuss here. Recently, OK Exchange Insights collaborated with blockchain analytics company Catalyst to study Bitcoin transactions data from January through the beginning of August. They found that small guy retail investors mostly pulled back on buying during the year's market weakness. Instead, they took a wait-and-see strategy. And of course, this is always the problem with retail investors. They generally get out to the bottom and buy at the top, or roughly around those areas. This was different than larger investors who took the opportunity to accumulate more Bitcoin as prices fell, and that's what smart money does. It's about value investing, really, at the end of the day. Getting a deal, buying it low, and selling when it's high. Of course, it's difficult to do that because you never know when you hit the really rock bottom and when you really hit the top, but that's generally the goal. In the chart below, here you can see the black line is Bitcoin's price from January through August the 1st. The blue jagged line shows Bitcoin transactions of less than 1/10 of a Bitcoin. You can see it go pretty much lock in step, right, as they say here. What you're going to see are retail purchases that oscillate in near lockstep with the price of Bitcoin. And that's basically how it is. So when price is moving higher, people are buying more. When it goes down, they buy less, right? So that's the retail investor, which is sort of doing the opposite of what you should be doing. An article or some quotes from Cointelegraph. Retail transactions make up the bulk of Bitcoin movement and more closely track price fluctuations. These investors tend to be more easily shaken out of the market. It's when the data moves to track transactions over 1,000 Bitcoins that becomes interesting. The number of transactions between 1,000 and 5,000 Bitcoins continued to go up since the end of June, even as the price began to consolidate. And that's where the buying opportunity is, right? So here's the price of Bitcoin, as you can see. And during these periods here, and here is when the big whales are buying, right? This could be the last time we see the world's largest cryptocurrency at prices this cheap, and that's from Matt McCall, crypto specialist. And of course, Matt has a service that he's trying to sell, of course, so he's going to be certainly uber bullish on crypto space, especially the altcoins that he is recommending. So you have to take that into consideration when taking this advice, right? He certainly has a horse in the race. Bitcoin is ridiculously cheap right now. I've been adding to my own portfolio throughout the pullback. And yes, the long-term outlook for massive growth and profits in Bitcoin and altcoins is as bullish as ever. And then he goes on to say that the Plan B model predicts Bitcoin hitting near 288,000 per coin by the time its next halving arrives in 2024. And I think perhaps we'll see 6-digit Bitcoin by the end of next year. By Christmas 2021, Santa will be good to us, I hope. My prediction, and of course this is what he's seeming to suggest, following the Plan B model as most of us are, because it's been the most accurate so far. So I agree. I think right now is a good time to be taking a position in Bitcoin, even if it's just 1 or 2, 3% of your portfolio. But none of this is financial advice, just what I'm doing and thoughts I'm thinking just to help you along. Okay. XRP plunges 20% from highs. Here's why more downside is expected. XRP being Ripple, of course, or the Ripple token, I should say. XRP falls 20% in 2 days is the high for 2020 already in. I'll give you a hint. This article suggesting that there is. We'll see if it turns out to be right. Again, talking about technical analysis, of course. The altcoin known as Ripple has had one of the worst runs in crypto since its all-time high was set at over $3.50 per token. It spent the last 2 years as the market's worst performer, yet somehow has held on to one of the topmost ranks in the space. It's about number 4 right now, I think, and we'll take a look. Unlike Bitcoin and Ethereum that set new 2020 highs following the Black Thursday low, XRP still has been trading far below the early February 2020 high. And here is talking about the 3-day relative strength index bearish divergence. So it's making lower highs on higher RSI index, I think, right? Yeah, the RSI, which is usually a divergent signal. So when this is going down, this is diverging and this is heading up. Usually you'll see that, right? And here, the divergence is heading upwards and the actual price starts to trend down. So arguably, this is heading up even steeper. They're suggesting that this is going to go down further. I mean, it could go back down to around this level, anywhere in between there. We'll see. It's just technical analysis, basically. If the bearish divergence plays out, Ripple could be in for yet another 80 to 90% crash. According to 2 past bearish divergences, each time the asset failed to set a new high, the altcoin plummeted by between 84 and 92%. So there's that. Ripple has certainly been underperforming. One of my worst performing assets I have. I have a little bit of Ripple still. So there you have it. Okay, let's take a look at the markets, see how they're doing. Okay, so a little bit under pressure today, a little bit red, Nasdaq especially over 1%. We'll see. These are small numbers yet. It could still recover by the afternoon. Time will tell. But so far it's looking like perhaps this could be another down week. That would be my impression so far. We'll take a look tomorrow, see if that is in fact the case. Gold, I imagine, is probably still sort of consolidating. Here we go. Yep, gold consolidating still between 1900 and 1975 or so. We'll see what happens with that. It's going to continue consolidating for a while, but eventually there's going to be a lot of pressure and it'll probably head, I would imagine, to the upside, but of course that's no guarantee. Could head down to this downside too, come back down to around 1700 or so. I would think maybe 18. There's a little bit of support here, but mostly at around the 1700 level. And silver doing much the same as gold, as we would expect. Again, between 26 and 28 around there is where it's hanging around. A little bit of support here around 24.5, and then we have to go down to about 18.5 or so to get some more support. I would suggest, but I'm not sure it's heading that low. It could, of course, and that would be a great buying opportunity. Right now, I'm finding silver a little bit rich for me, but I think there's still a lot of upside potential from here. Okay, on to the cryptocurrencies. Okay, Bitcoin, or the cryptocurrencies, market cap up a little bit, 1.3% at $357 billion market cap and 5,904 coins for your purchase and pleasure. Bitcoin down a little bit with its dominance at about 56.5%. You can see here over the last 24 hours, Bitcoin, Ethereum up, XRP up a little bit. So much for that downward pressure, although time could tell. Polkadot down, Bitcoin Cash up, Chainlink down, some of the others up here as well. Bitcoin SV. So the Bitcoin wannabes are down and Bitcoin is up. That's interesting. That could be a divergence and suggesting Bitcoin is going to continue to be the dominant one, and as I imagine it would be, because it has the best network effect and the longest lived of all altcoins so far, of all the cryptocurrencies really. EOS down, Tron up quite substantially, Neo as well, Stellar down just a little bit, sort of relatively flat, under quite a bit of pressure. So there you have it mostly. Oh, VeChain bumped up 8.9%. It was nice to see I have a bit of VeChain, so that's a spot of sunshine on the horizon for me. There you have it, folks. All right, so let's take a look at the online oracle for today's most pressing question. So the one article we read, as you saw, this one over here, I was suggesting that XRP has plunged 20% and it could plunge even further, up to 80-90%. So I thought we'll make an interesting question for the 8-line online oracle, the 8-ball economist, our trusty sidekick. Will XRP lose 80% of its value this year? I don't think so. So there you have it, the magic 8-ball, our online oracle. This seems to think that XRP will lose 80% of its value this year, which is interesting. So I wonder if the altcoin market generally is going to be under pressure towards the end of this year. And if it is, then perhaps Bitcoin will be under pressure, which means that, for the rest of this year, arguably, we could have great opportunities to get a little bit of a position in the cryptocurrency space, Bitcoin or any of the other altcoins that we're interested in. So who knows? We'll see what happens. The future will reveal itself in time. In the meantime, thanks so much for joining me. I appreciate you. I hope you're having a great week. It's Friday, so take a good, long, restful weekend. We'll see you tomorrow. And thanks so much for joining me. Remember to pay down some debt, squirrel away some savings, take care of yourself, eat healthy, drink water, take in some sunshine, go for a walk, things of that nature. And of course, above all else, dum spiro, spero.